Morning, everyone. I can see that a few people are still joining the call, but it is 11 o'clock, so I will get started. For those of you that don't know me, my name is Eva, and I will be taking you through this morning's webinar. Now, the topic for this morning is very exciting. It's all around artificial intelligence, but importantly, it is going to cover how you as an investor can get access to some of these companies that are at the forefront of this AI revolution. So I'd like to start off with a quote that I have included on the slide by Vladimir Lenin. Over 100 years ago, he said, "There are decades when nothing happens, and then there are weeks where decades happen." And it certainly feels like we are living through the times where in weeks so much is happening in terms of technology and development. So the AI revolution is here. But why is it all happening now? Well, there are a number of reasons. But firstly, we just have more data than ever before. Every time that we are browsing the internet and making clicks at different websites, every time that we're listening to a Spotify podcast or a playlist, or watching our favorite show on Netflix, we are creating more and more data points. And the companies are able to use all of this data to better predict what we might want to watch next, or what playlist we might want to listen to next. So through these years that we've been using the internet, we've created many of these data points. But very importantly, there has been impressive leaps in computing power. And it's now possible to store, analyze, and be able to process all of this data at an unprecedented scale. So without this computing power, the data would be worthless. So whether we like it or not, the AI revolution is here. Technology is going just one way, and that is forward into an ever more intelligent future. Now, everything that is happening with artificial intelligence has been compared to the dawn of the internet. So could this really be as big as the internet? Well, some experts actually argue that AI and this revolution may actually be bigger than the internet. AI has the capability to actually change every bit of our lives and our society. For example, AI could be used to develop new forms of energy, to create new jobs, and even to solve some of the world's biggest problems, such as poverty and climate change. But in order to use AI to its full potential, we do have to overcome a couple of challenges, and some of these challenges are around ethics as well as accessibility. We need to make sure that there are ethical guidelines for the development and use of AI, so that most of the outcomes can be positive. We know that with every development, good and bad can come from it, but most of this technological advancements needs to be used in a positive manner. And then, of course, accessibility, really, really important. It needs to be beneficial and accessible to everyone and not just a select few. So let's chat about some of the technological advancements that have already taken place. Well, ChatGPT took the world by storm when it was launched in November 2022. But even prior to that, AI has been used across many different industries and has already made various improvements to a lot of industries. And I want to provide some examples. So starting off with the retail industry. Now, this is something that a lot of you might relate to. If you love online shopping as much as I do, I'm sure you've noticed on a lot of the websites, there's these little chatbots, and these little chatbots are there to answer simple questions or to help you to navigate the site.
So this is a very good example of artificial intelligence and these, new thinking technologies that can help the consumer experience be better. So you may want to return to that site because you had a good experience, your questions were answered, this was not dependent on the time of day. You could be doing your online shopping in the middle of the night, but this chatbot is there, available 24/7 to help you navigate that site. So that does make the consumer experience better. In addition to that, another thing I'm sure a lot of you have noticed is that the more you browse certain items and the more you purchase certain types of items, the more these retailers are able to suggest items that will be suitable to you, so things that you may like. So all of that, every time you're browsing the internet and buying something, that history is being stored and that data is analyzed, and the retailers are better able to predict what we might want to purchase next. And again, this is a very good example of how the consumer experience is better because items that you actually like are being suggested to you. But at the same time, we are spending more money. The retailers are winning because they know exactly what interests us. So that's a very good example of AI in the retail space. But there are also very, very exciting uses of AI in other industries. And some examples in the healthcare space, AI is being used to analyze a lot of data. So data from medical records, clinical trials, and this huge amount of data is being analyzed. Trends are being picked up, and these are trends that are not often picked up by humans or by the naked eye. And new drugs are then being developed on the back of the findings from this data analysis. So very, very exciting of what AI can do in the healthcare space. And this is just one example that's already in place. I have no doubt that you have seen that massive development has been made in the development of self-driving cars. And again, the use of artificial intelligence is a huge component. Now, the data from the cameras and the sensors around the self-driving cars, all of that data is used to analyze the environment around these cars. The more data that these super machines and computers are fed, the better able they are to predict outcomes. So this is why in the future, self-driving cars will be able to predict any possible scenario, and they will essentially become better drivers than us as humans. These self-driving cars will not be subject to whether they had a good night's sleep the night before, whether they have consumed alcohol, whether they are distracted with the stress of the world, whether there's poor eyesight at play. So human error is, well, humans are prone to all of that error, whereas the more data that these self-driving cars are fed, the better they will become. And ultimately, this is a great example of how AI will benefit overall society, specifically in this transportation space, by making our roads safer. And then just another few examples. Manufacturing is a good example. We have all seen the use of automation, robotics. This has improved efficiency as well as productivity. And then very good and important uses in the finance as well as cybersecurity space. So in finance, for example, we know that AI is being used to analyze a lot of data of many transactions. And what they're able to pick up is potentially fraudulent transactions. So anything out of the ordinary by the analysis of all of this data can be picked up and then investigated. So fraud is likely to be picked up now a lot quicker than before. And then the same goes for the cybersecurity space. A lot of data is being analyzed, and anything out of the ordinary can then be picked up, and cybersecurity threats could potentially be mitigated. So a lot of very interesting uses of AI that are already happening. And as these technologies develop around us so quickly, we can expect to continue to see increased usage of artificial intelligence and all this analysis of data in more industries and more aspects of the various industries around us. So let's talk about ChatGPT. I mentioned that it took the world by storm when it was launched last November. So it was launched at the end of November 2022. In the first 5 days, they reached 1 million users. This is the fastest growing consumer application of all time. And at the moment, they have more than 200 million active monthly users. So definitely a very, very popular application, and it made headlines globally around the world. But ChatGPT is only the beginning of this generative AI revolution. And generative AI is a term that's used for the technology that uses what it learns. So everything that is fed, it gets cleverer and cleverer, and then it's able to actually generate images, videos, text, and audio. So this really is what ChatGPT is. You can ask it a simple question or a very complex question. You can ask ChatGPT to write computer code for you, but you ask that question and it uses everything that it has learned to give you this very human-like answer to your question. And these questions could be anything from something scientific to something really basic. And what's incredible, and I'm sure a lot of you on this call have tried either ChatGPT or Microsoft Bing or Google's Bard. And what's fascinating is really how human-like these responses are. But ChatGPT isn't the only one. Many of the big tech companies out there are trying to stake their claim in this generative AI market. And these include Microsoft, Google, Baidu, Salesforce, even Morningstar have launched their own AI-powered chatbots. So the generative AI market is huge. It's projected to grow to more than $670 billion by 2030. This is a compound annual growth rate of 47.5%. So simply massive. And just this year alone, in 2023, for the first half of the year, $13.3 billion was invested in generative AI startups. And this is almost 3 times the amount that was invested in the prior year, so in 2022. So you can see how the interest in the space is accelerating, the investment in the space is accelerating, and how there's so much more growth to come over the next couple of years and even decades. So the big question is, where can investors get exposure to this AI revolution? Well, there are a number of AI type of ETFs out there listed globally, but a lot of them are focused on very niche sectors such as robotics. And what a lot of them are lacking is really this exposure to large language models, as well as the full ecosystems of companies that are supporting the development of these large language models. So we truly believe that you need an active management approach to gain access to artificial intelligence. Not all companies will be winners. It's difficult to predict who will be, really the winner of this AI race. But what we've seen in terms of research and development and history is that really the big players are the ones that have the largest capability and the most funding for R&D, and a lot of them are likely to be at the forefront of this AI revolution. But not only that, as I mentioned, very difficult to predict the future winners. That's why we do want this more nimble active management approach. But in addition to that, what is certain is that we are analyzing more data, we are using more computing power. So it also makes sense to invest in the chip manufacturer and the cloud storage providers. So we have two funds. We have the Sygnia FANG Equity Fund, and then the newly launched Sygnia Itrix FANG.AI actively managed ETF. So let me start off by talking about the unit trust. The FANG Equity Fund has been around since August 2018, and it was only recently repositioned over the last couple of months to really have this AI focus. And the actively managed ETF is our latest listing on the Johannesburg Stock Exchange. Its listing date is actually today, so it's gone live, it's available in the market. And both of these products, the unit trust as well as the newly launched ETF, are very well positioned to give you that exposure to key sectors driving these large language models. So these will be the chip manufacturers, the cloud storage providers, as well as companies involved in these more niche cloud solutions. So FANG, for example, has exposure to some of these global semiconductor giants, such as NVIDIA, as well as their competitors, such as ASML and AMD. NVIDIA, I'm sure a lot of you have seen the headlines, became a $1 trillion company and is up more than 200% from a return perspective just this year alone. And what's also exciting is, of course, the cloud services. So many players do not want to run these high-powered machines and instead want to run these models off the cloud. So these funds are also investing in leaders in the cloud services. These are big names such as Microsoft and Amazon. There are also other interesting and more niche providers of cloud services such as Snowflake, and these offer very, very exciting opportunities as well. So that's another name that you can expect to see in the fund. But overall, what we're seeing across the tech industry is that most of your big, tech firms, the household names, they are all enhancing their existing offerings by embracing these large language models. I have mentioned some of these examples already, but I have listed a number of them in the slide. So really, we're talking about Google's Bard that I mentioned, which is, by the way, very, very good. I will admit I used Google's Bard for some of the information to help me with the content of this webinar. There's Microsoft's FANG.AI that's also really, really good. Adobe's got Firefly. Salesforce has got this new Einstein, which is a suite of AI-powered features, and they're really designed to make this whole customer relationship management system way more efficient and a lot smarter. Baidu launched their AI model, it's called Early 3.0, and then the likes of HP and Oracle are also, really working to take their stake in this whole large language model space as well. So all very, very exciting, and all of these big names are moving into this space. Now, I did mention that the unit trust, so the Sygnia FANG Plus Equity Fund, has been around since 2018. It has only more recently been positioned to be, taking advantage of this AI resolution. But throughout its inception, it's had a phenomenal track record from a return perspective. So you can see this, phenomenal growth just this year alone. A return of more than 80%, which is just incredible. And over the last year, it is ranked #1 from 104 different funds in this general equity space. So really, really phenomenal returns from this fund. And what's interesting, if you're looking at how tech has performed in general, we look over the next slide. What I've done is I'm comparing the performance of the FANG Plus Equity Fund, because it does have a track record since August 2018, and I'm comparing it to the general tech market. And for that, I've used the NASDAQ composite. So the NASDAQ composite is the blue line, and the FANG Plus Equity Fund is the green line. So what we can see is that, as tech goes up and down, these two are very much moving in line with each other, which makes sense, both, tech sort of exposure. But since the launch of ChatGPT, which, as I mentioned, took the world by storm, AI was all over the headlines, it was a topic on everybody's lips, we can see that divergence in performance. And you can see how the specific AI-focused names have just really outperformed your more general tech sector. And if I need to zoom in on that, just from that date of end of November 2022 of ChatGPT's launch, you can see, that divergence is quite prominent. So not all tech is the same, and of course, this AI-focused tech has done phenomenally well, and of course, from everything I've spoken about now, and where the generative AI market is going over the next couple of years, there's still so much growth to come in this space. But the very exciting thing about this morning specifically is the launch of Sygnia's first actively managed ETF. And this ETF is the Sygnia Itrix FANG.AI actively managed ETF. I mentioned earlier, it's already live, it's listed, it's trading on the JSE, it's accessible via a number of different platforms, so you are able to invest into this actively managed ETF already. Now, just a little bit about the fund. If you're looking for the JSE code or the ticker, it's SYFANG. From a risk profile perspective, it is considered in the high risk category. We have to appreciate that it's made up of global equities. So these are just tech companies, so it's all global equities. So from a risk profile category perspective, it is high risk. It does have a benchmark, although not necessarily a benchmark cognizant fund, and I'll explain a little bit more about the portfolio construction and investment philosophy over the next slide, but it is benchmarked against the FANG Plus index. It has the same fee as the unit trust, and that fee is an annual management fee of 70 basis points, and it does attract a performance fee should the fund outperform its benchmark. Now, what can investors expect? Well, if you invest into this actively managed ETF, you can expect to have exposure to companies that really are at the forefront of this AI revolution. So it's companies involved in big data, cloud storage, large language models, e-commerce, social media, and all these ecosystems. The fund does not, because it is actively managed, does not have to hold every single constituent of the benchmarks. The portfolio managers may decide that they don't want a certain stock, and they may and have included, many more stocks. In fact, this benchmark has only got 10 constituents. So the benchmark itself is very concentrated. Whereas both the unit trust as well as this actively managed ETF have about 30 names. So you would have exposure to about 30 names where the benchmark is maybe 10. So a lot more diversified. As much as it's just purely global equities, it is lower risk than a benchmark purely due to that diversification element. So how do the portfolio managers construct the portfolio? Firstly, just to talk a little bit about the portfolio managers. These are two very experienced individuals that have been with Sygnia for many, many years, and they are supported by a broad team of research analysts. So before any single holding is included in this fund, there's a lot of research that is taking place in the background. So the way we think about the portfolio construction is really about half of the portfolios is exposed to the big five names in the benchmark. At the moment, these are Apple, Amazon, Alphabet, Meta, and Microsoft. And then the other 50% of the portfolio is made up of the remaining five constituents of the benchmark, as well as a lot of other companies and their competitors. And these really are companies with the AI winning themes, the chip manufacturers, the cloud providers of all of these AI applications.
What you can expect to see from a top 10 holdings perspective,
as you can see on the slide, the logos of these very well-known companies. So some of these very large names, but as I mentioned, it's often really the big and powerful companies out there that have the resources, skills, capability, and funding to actually be at the forefront of a lot of this technological change. A couple maybe was mentioned, I already mentioned, Netflix, Snowflake is a very exciting company from a cloud, perspective. And NVIDIA, worth to mention again. So I mentioned that just this year alone, the share price is up more than 200%. It's $1 trillion company. But what makes NVIDIA so special? Well, we've spoken about all of this data that's available and all of this processing power that's needed to actually analyze this data. So these large computers that actually process data and power this generative AI, they run on these powerful chips, and these chips are called graphic processing units. So in short, they're called GPUs, so graphic processing units. And NVIDIA is the largest provider of these GPUs. In fact, they control about 80% of the market of these GPUs. So you can understand why they have been so successful and why their prospects are still, looking very, very promising for the year ahead. And ChatGPT, which is the popular application that we spoke about, that's on everybody's lips and has made headlines. For example, ChatGPT was made using thousands of NVIDIA's GPUs. So this is, just an example of how this full ecosystem works. The chip suppliers, the cloud storage providers, and how everything fits into this, very exciting space of generative AI. Now, I did mention that this is an actively managed ETF. So just to give you a little bit of background on actively managed ETF. So actively managed ETFs have been around globally since about 2008. Now, the passive ETFs have been around since the early 90s, so it's been more than 30 years. Whereas actively managed ETFs, the first one was launched in the US in 2008. This was followed by Europe in 2009, Australia in 2015, and then in October 2022, the JSE made these available for listing in South Africa. So since October last year, issuers such as ourselves are able to list actively managed ETFs on the Johannesburg Stock Exchange. You do get two different types. You get fully transparent actively managed ETFs, as well as semi-transparent actively managed ETFs. Now, the fully transparent ones are very similar or pretty much the same as the ETFs that you would have become used to and more familiar with. So if you think about all the passive ETFs, if you're invested in any of our products, you'll know that there's full transparency with regards to every single constituent that is in the fund. So at any stage, an investor doesn't have to wonder what they're investing in. If they want to know exactly what companies make up that ETF, they can simply log on to the issuer's website. So if it's a Sygnia ETF, they log on to the Sygnia website and they can download a file that will show them exactly where they are investing. So with the fully transparent ETF, it is no different in terms of disclosure. So at the end of the day, a file will be uploaded on our website showing you exactly what's in this actively managed ETF. Now, as with all or with a lot of actively managed products, you can appreciate that there may be some portfolio managers that may want to keep some of it a secret, at least for some time. And for those portfolio managers or for those products, what is available are semi-transparent ETFs. So portfolio managers can choose to only provide quarterly disclosure. So in between the two quarters, investors may not necessarily know the exact holdings of the fund and the exact weightings to the fund. We have opted to go for fully transparent, so daily disclosure of our actively managed ETF. And just some background on these actively managed ETFs globally. They are growing. They have not been around for that many years, but we are seeing growth in the space. They only represent about 2% of all active funds, but we have seen the inflows into actively managed ETFs increase year on year, which is quite promising. In terms of total assets, as at the end of September 2022, $440 billion invested in actively managed ETFs, and the number of actively managed ETFs at that time was 1,749. So if you look at the table at the bottom, you can see that since these came about, more and more products and more assets are being invested in actively managed ETFs. So certainly, picking up some momentum and becoming quite popular. In terms of asset classes, so actively managed ETFs are available across the asset classes, but the largest segment is in fixed income, followed by equity. But as the market is growing, we can see this is diversifying across all of the different asset classes. And then ETFs in general, both active and passive, they continue to grow year on year. Investors, both retail and institutional, are becoming more and more comfortable and have more interest in these exchange traded products. So we see both the number as well as the asset under management of exchange traded products increase year on year. So why are ETFs so popular? In summary, both the actively managed ETF as well as the passive ones that we specifically are managing in a transparent manner, they actually have many of the same benefits. So firstly, costs. So passive ETFs are very low cost because they are simple index tracking products. However, based on the research that I've done on active ETFs globally, active ETFs are priced somewhere in between passive ETFs and your full-blown actively managed funds and unit trusts. So there's still, as much as they're actively managed and they do attract higher fees because they're portfolio managers that are, of course, doing a lot more work in the background, they still come with very, very good fees. Because I'm specifically referring to the full disclosure transparent ETFs. They do have very good tight spread in the market. So for this actively managed ETFs, we are again using our partner Jane Street as our market maker. So you can expect narrow spreads and deep markets. The access is easy. Passive as well as active ETFs, all ETFs can be accessed via the Sygnia platforms or via a stockbroking account. These are listed instruments trading on the Johannesburg Stock Exchange. And then it's really nice to be able to gain that global access without having to worry about exchange control. So as an individual or an institution, if you buy into any of these ETFs that have exposure to global companies. You're benefiting from that offshore exposure, although it's not counting towards your annual discretionary allowance. Of course, if you do have to withdraw, you are withdrawing in rands as well. And there are many other benefits. So diversification, ETFs are a collection or a basket of stocks, so you're getting a diversified instrument all in once. There's transparency, specifically the ones that we are talking about, both the active one as well as our other passive ones. Full transparency with regards to exactly what you're investing in. And many of these ETFs also provide cash flow distributions. And then just to touch on costs again. Costs, really, really important. National Treasury did work back in 2013 to try and really put numbers to how serious, costs can actually impact investment returns over the long term. There's a lot of things that we cannot control with regards to market, but as investors, we can choose to invest into fairly priced products. And what this slide is telling us, so this is the work from National Treasury, but it really tells us that a saver who's able to reduce the cost of their retirement funding portfolio from 2.5% of assets to 0.5% of assets, their benefits that they will retire with after 40 years would be 60% greater. That's all things being equal, exactly the same investment return, just simply being able to reduce the cost has that massive impact on the amount that you will retire with. So cost, really, really important. And this is where ETFs can really be beneficial for every investment portfolio. We really do believe that Sygnia is ideally positioned to be the provider of choice when it comes to exchange-traded funds. We have a long history of both innovation as well as a phenomenal track record in the indexation space, and this goes back to 2003. So many, many years of good experience in this indexation space. And we do have a wide range of exchange-traded funds that is available. So all of these instruments have been trading on the JSE, some of them for many, many years already. So we've got 15 passively managed ETFs, which is what you see on the slide at the moment. And these range from local index tracking products to, we actually more specialized in exchange traded funds that give you exposure to global markets. And these are anything from various regional products to very niche products to themes in sectors such as healthcare. So with this range, you're really able to build a very well diversified portfolio at a very low cost. And then, of course, this morning, we are very, very excited about our latest listing, which is the first actively managed ETF in our stable, which is the Sygnia Itrix FANG.AI actively managed ETF. And then just lastly, from a performance perspective, the range of exchange-traded funds that we have and that I've included in the slide, these are all index tracking. They replicate, the indices that they track really, really closely. And we can see that from a performance perspective, because most of them give you that global exposure, they've done really well over the longer term, due to the rand depreciation over the years as well. So really, really good from a performance perspective, and they have been tracking the indices really, really tightly. So with that, I will end off my presentation for this morning. I will take a couple of questions, and anyone that I do not get to in terms of the Q&A in the live session today, I promise I will get back to every single one of you on email. So just to close off again, really thank you for logging on and listening to this webinar. We are extremely excited about the prospects of AI. We've got two phenomenal products in the AI space. We often get asked, why ETF and why unit trust? There's no you cannot say that the one instrument is better than the others. Some investors are more comfortable in the unit trust space. Some investors prefer instruments that are listed on stock exchanges. They want to see, that pricing throughout the day, and that's absolutely fine. And this is why we make certain products available in both wrappers. So this is not the first time where we have a unit trust and an ETF. We saw it in, we see it in the healthcare space as well. You've got the unit trust, as well as the ETF, as well as the fourth industrial revolution fund as well. So I will take some questions now. Let me have a look. Please bear with me. Will this be available on tax-free investments? So one of the rules for tax-free investments is that funds should not charge performance fees. And as I showed you in one of the slides with the pricing, this fund will attract a performance fee if it outperforms its benchmark. So unfortunately, for that reason, it will not be available for tax-free savings accounts. Oh, I'm so sorry. I'm getting comments that the sound was awful. I really, really apologize for this. Sometimes, it is beyond our control, and I believe that these undersea cables have had a big, impact to a lot of the internet providers. Another question about tax-free investments. I have answered that. There's a question around a vote. So we did issue a ballot to change the investment policy of the FANG Plus. And, investors did vote, and that ballot was approved. So the FANG Plus equity fund has been changed to have more of this AR focus. So the result was positive. Particular feature in this new fund? Yes, it does at the moment. So the fund, as I mentioned, is actively managed. So what you see in terms of holdings today may not be the same in a couple of months' time, but at the moment, yes, Tesla does feature. You may still get to this, but what is the difference between the AMETF and the FANG Plus equity fund? In terms of portfolio managers, exactly the same individuals are managing both of these. It's really just the wrapper. The one is listed on the stock exchange, and the other one is a unit trust. So the access is different. You can buy the one via platforms as well as stockbroking accounts, and the other one is, anywhere where this unit trust will be available. So history shows us that the top 10 companies are staying in these positions of being in the top 10 for shorter periods, measured by decades. If this trend continues, you would expect these large cap technology companies to be replaced quicker than this one. Where does it leave the FANG fund? So I think this is a really good reason why it's actively managed. So the portfolio managers are really, doing a lot of research in the space, really trying to see, who will be the front runners in this space, and they're positioning the portfolio based on that. If I'm invested in the Sygnia Fourth Industrial Revolution Global Equity Fund, will I have exposure to more or less the same as the FANG Plus Equity Fund and the Sygnia Itrix FANG.AI fund? So no. Firstly, the Fourth Industrial Revolution Fund is very well diversified. We're talking about a fund made up of more than 500 different constituents. It's not just AI focused, but it's focused on many other technologies. In fact, it tracks 26 different subsectors. So we're talking about space exploration, clean energy, robotics, drones, there's so many of different subsectors, and within each subsector, there are many, many different companies. Whereas the FANG plus equity funds, as well as the actively managed ETFs that I spoke about this morning, really is focused on a much smaller group of companies. So we're talking about 30 in these portfolios at the moment, and as you saw from the top 10 holdings, very much some of your large tech names that you know very well. Will these slides be available later for us? So we will not make these slides available, but what will be available will be the recording of this webinar, and that will be available on our website and YouTube channel. And of course, with the recording, you will be able to see the slides as they were presented this morning. And there's some questions about, asking when this ETF will be available on various platforms. We're not always in control of that, but typically platforms that make ETFs available would make it available possibly today, the day of listing, or early next week. Another question about how it differs from the Fourth Industrial Revolution Fund. So as much as both of these are focused on new technologies, the technologies that really are at the forefront of the Fourth Industrial Revolution, they are quite different. You're talking about a much more concentrated fund when you're talking about FANG.AI, and broad, diversified, more than 500 different constituents in the Fourth Industrial Revolution Fund. You're also talking about more diversification in terms of the different subsectors in the Fourth Industrial Revolution Fund. When we'll be able to start investing, you can start investing from today. It's already available. Active ETFs pay significantly higher management fees than passive funds. Yes, that is true. Passive funds are able to keep their costs low because there's no active decision making. So in terms of the manpower that you need in the background, you're utilizing a lot of automation and a couple of very skilled individuals that are able to trade and rebalance as close as possible to the index. But there's no thought and decision making with regards to whether they like a certain stock or not. If a stock is in the index, they're simply replicating that index. In the active management space, a lot of research goes into deciding exactly what should be included in that fund. And for that reason, there's a higher cost attached to not only actively managed ETFs, but active products in general, because you're employing more people, you've got larger teams in order to be making these decisions. Would you please show us Sygnia ETFs historical performance slide again? If you are still on the line, here it is. So this is as of 31 August, and this is the performance of our various ETFs. Remember that these are passive, so there has been no active decision making in these portfolios. Morning, I bought 800 units this morning. Congratulations to you. This is great news. Is Sygnia planning any further actively managed ETFs? Well, we truly do believe that we are at the forefront of innovation. So as and when we believe that there's good opportunities for a different type of product, then we will surely launch more actively managed ETFs. So definitely watch this space. A couple of people saying thank yous. It's only been my pleasure. I do apologize again for that sound. Please may you clarify if the AM ETF is equally weighted? No, it is not. So there's a higher weighting to the big 5 names and a much smaller weighting to the other 20. Can you repeat the shorter JST name? So it's SY. So an easy way to remember, all of our ETFs start with SY, kind of, standing for Sygnia, and then FANG, because it does, the name is actually the FANG.AI ETF. Will the recording be made available? Yes, it will be. Typically, our very talented marketing team will clean it up and make sure it sounds as good as possible. And they will send everybody that attended this call an email with the link to the recording of this webinar. Soon it will be available to PC Equities as well. Yes, it will be.
So there's actually many questions, and I don't think that I will be able to get through all of them this morning. But as promised, I will get back to
Every single one of you over the next couple of days. I see a lot of similar questions, such as is it already available on the JSP? Yes, it is. A lot of questions around code. So in order not to be sitting here this morning and just repeating a lot of the same questions, let me work through them and I will get back to all of you. So thank you very much once again for joining me this morning.